Good morning friends and welcome to Sharekhan pre-market roundup. Let's first have a look at our markets. What happened yesterday? There was some sort of sideways movement in our markets with Nifty ranging broadly between 5110, 5120 on the lower side, on the higher side taking some stiff resistance at around 5140, 5150 levels. We didn't broke out of the range and closed finally up by 40 points on Sensex, around 10 points on Nifty. Going to the global markets, we saw Europe going down by around 0.5% to 1% across the markets, mainly because of the concern that we might see that Greece bonds might be restructured again, and this can be to the tune of around euro 2 billion pounds of euro bonds. On the US markets front, US market was down at one point of time by around 200 points, but then recovered very sharply from there in last 10 to 15 minutes time to close down by 100 points. However, the reason behind US going down was not exactly euro. To some extent it was Europe, because we saw that Germany's rating has also been changed from AAA positive to AAA stable. But the main concern for US markets to go down was the earnings which are coming out over there. Firstly, let's have a look at the earnings of the 3-4 companies which US has reported. The first being United Parcel Services. It's a bellwether stock, economic bellwether stock, and the company has failed to reach guidance which was given earlier, and also reduced the guidance for the coming quarter. The stock was down around 4%. Major telco and smartphone carrier AT&T also missed the guidance. Video streaming company Netflix registers 50% lower subscriber and the stock was down by around 12%. And last but not the least, Apple. The result came after the bell in US. The stock is now trading down by around 5% post market. This was because Apple failed to reach the targeted guidance which was given in the last quarter, and also reduce the guidance for the next quarter, mainly on lesser demand from China. As we said that US market recovered sharply in last 10 to 15 minutes time by around 100 points, being down 200 points and closing at 100 points. This was basically on the back of US Federal issuing some statement that they might look to take some new steps. Looking at the sluggish economy and slow growth, they might take some new steps to spur hiring and spending. Now I'd like to invite Shaival to have a check on derivatives. Hi Shaival, good morning.
Good morning.
So how you see markets now? We are already corrected around 200 points from the higher level of 5350, which acted as a very stiff resistance, and now we are languishing somewhere close to 5100, and market is taking some sort of support at 5100 ahead of the expiry. Do you think this support can be holded on to?
Yeah, see, first of all, I'd like to draw your attention towards the PCR ratio. The PCR ratio in previous trade was has gone below the mark of 1 and was trading at 0.99. Again, what we have seen in yesterday's trade is that the PCR ratio is at 1.01, which is still a comfortable zone. Now, having look at the activity on the strikes front, what we have seen is that 5100 and 5200 call and put option both in the current series is having a good activity in open interest, whereas if we have a look in the August series, 5100 call option followed by 5200 call option has seen a good activity. So what we feel is that 5100 on lower side would act as a support, or we can say that market it would provide a cushion to the market on the lower levels, and from there we might see some bounce in the market. Also we might witness intraday whipsaws in the market because we are heading close to the current series expiry, and on higher side 5200 would act as a hurdle for the market because handsome amount of activity has been witnessed in 5200 call option.
So this activity has been shifting lower. Day before yesterday the activity was in 5300 August call option. Now it has shifted to 5200 and 5100. So can I make out in some way that we are now close to finding a range for August month where 5300 can be taken as a very strong support or very strong resistance point? On the lower side, there is some good activity seen in 5000 put option. So that can be taken as a strong support.
See, it's tough to take a call for the August series right now because we have an expiry lined up, as well as we have many events. One of the important event in domestic market is of RBI monetary policy, that is on 31st of July. But yes, if we want to take a broader view, the overall bias for the market from our side is negative. So probably 5,100 would act as a support, as I previously said. But if it fails to hold that, then on lower side 5,000 would be the next support which market would find.
Any stocks, Shaival, you'd like to cover?
See, we have identified 3 stocks. From intraday perspective, we are Century Textile is looking weak, so we are having an opportunity to go short on that with resistance of 312.90. ITC is also looking weak with resistance of 255 rupees, and we also recommend buying DLF put 200 with stop loss of 1 rupees as we are closer to expiry. This can be taken as an expiry call.
Okay, Shaival, thanks.
Thank you.
Well, that was Shaival giving us a brief of derivatives. As per derivatives, we feel that there can be some whipsaws coming into our markets as we are headed for expiry. We already started seeing some action in 5300 call option and 5000 put option of the August month. So that can be a broader range for markets. Maybe we can drift another 100 points from here on if we break 5100 support, because the next biggest opponent is lying at 5000 put option. Now let's have a look at some fundamental ideas. First of all, GAIL has entered into an agreement to buy all natural gas produced by oil major ONGC. What GAIL has also agreed, GAIL and ONGC have also agreed to have a 3 years exclusivity period for this gas for all marketing rights for the gas produced by ONGC. We can have a stop loss of 335 rupees on GAIL for a target of 350 to 358 rupees. Buy at current market price. On the next stock front, TCS, the software major TCS, said it has partnered with Sevis for its BANCS suite of banking products to be offered on a cloud-enabled hosted environment in North America. Again, the action will be long with a stop loss of 1185 for a target of 1240 to 1265 rupees on the higher side. Adding to the woes of Maruti, as we all know, currently there is some trouble going with the workers in Maruti Manesar plant. The Haryana government has given another shock to the stock, with 235 crore being the amount which Maruti has to pay to HSIIDC as enhanced compensation to farmers for land acquisition. One can look to go short on the stock with a stop loss of 1130 for a target of 1070 and 1050. The current market price of Maruti being 1106, stop loss will be 1130. Whirlpool, the world major home appliance maker, has missed guidance and revenue in US, so we can see some pressure coming on the stock in our markets also. Action to be taken is short Whirlpool with a stop loss of 212 for a target of 202 and 198. To sum it up, we saw that US and European markets were down yesterday, but Asia is also down around 1% today morning. We can see some flattish opening for our markets and then take cues as we are heading towards expiry. On from our side, 5070 can be kept as a positional support, and 5085, 5090 can be taken as a support for intraday traders on Nifty. On the higher side, we will again see some resistance coming in around 5140, 5170 levels. That's all friends from our side. Thanks and bye. Have a nice trading session.